one more round here of FIFO, LIFO, and average, but I really like B, C, and D because they really make you dive in and analyze what's going on. That first page, the one that I have up here, that's actually what we're going to end with. But we do need information from that little bio to actually complete the next page. Again, we're doing it a little bit my way versus the book way, but it ends in the same types of numbers. So they don't really even date them, but I just listed all the main headings of what you're used to seeing. Our first activity is that we rolled in with a balance in inventory. How much did we have at the beginning? 100 units. And they list a total cost of $10,000. You might say, what do we need the unit cost for? Well, we do when we're trying to run FIFO, LIFO, and average. What is the unit cost? If we had 100 and they cost us 10,000, what's the individual unit cost? Okay, so plug that in. I wanted you to do a problem like this because if I really wanted to challenge you on the test, I'd give you it in this format. Okay, then what happened? What's our next activity that happened in the little bio? The company purchased how many? 200? And what was the total cost on those? 26,000. So if you take 26,000 divided by 200, each unit would be 130. So we haven't even done step 1 yet. What is step 1 in your notes out of the 9? Total units available for sale. We have 300, and I want you to put an A next to that. What's step 2? Total cost. Thank you. 36,000. So step 1, step 2, done. What's step 3? Okay, how many we sold? Do this. They tell us, shush. They tell us that we have 80 left in stock. The exact vocabulary says at the end of the year, Lisa had 80 units in ending inventory, or what's considered still here. So to figure out the difference, we of course do some math to figure out we sold 220. Before I like to move on to step 5 where we start calculating everything, read to me what step 4 is. Okay. What's step 5 then? Mark, you could do this without marking, but I want to just make it blatantly obvious what's going on. So I'm going to do FIFO in blue and LIFO in green. Okay. Remember, FIFO, we're selling the oldest stuff. We're trying to get to this 220 number. So did I have to sell all of my first 100? But how many of my next purchase did I actually sell? 120, meaning out of that 200, 80 are shush. Well, you bet there's 80 still here. I like that little quick check to make sure that our numbers and inventory all shake out. How about on LIFO? What are we selling with LIFO? Oldest or newest? Newest. So we're going to take all of that 200 purchase. Remember, we want this to be 220. We only are going to dip into 20 of that older purchase. 100 minus 20 is 80. So it's just a really nice way to just get your ducks in a row before we actually start calculating. Okay, if I had to go on to the next set, we're going to calculate cost of shush and then roll into cost of sold. Shush. There's 80 still here. Times, that's why I put those in red so you can see that it's times the 130. With FIFO, the oldest stuff's gone, the newest stuff's still here. So 80 times 130 is 10,400. I hope it's okay I'm doing the math with you. We are going to use that data to then say cost of goods available minus cost of goods shush equals what we're really trying to get at here, cost of goods sold. Cost of goods available, where are we grabbing that number from? From up above, that 36,000. Minus what we just calculated, 10,400. The actual cost of goods sold, 25,600. From a highlighting perspective, that's where that 36 came from. If we analyze this, if we're selling the expensive stuff and keeping the older stuff, in this case, which is cheaper, I want you to calculate LIFO on your own real quick. Why don't you guys calculate LIFO? Still have 80 shush. It's just we're multiplying it times our older unit cost. Why such a rise in cost of goods sold? Why has cost of goods sold jumped to $28,000? Before it was only $25,006. Why do we see such an increase? What are we selling? Are we selling the cheap stuff or the expensive stuff? But from Uncle Sam perspective, is that going to bring down what we owe Uncle Sam in taxes? It is, because less of a net income means we're not making as much money. To do average cost, remember we have to stop and figure out our average unit cost. So that's when we take our total cost available for sales, 36,000, divided by the 300 of units available for sale to shake out at $120 per piece. We still then take the 80 shush, the 80 goods that are still here, times 120. Which is 9,600. And then we still plug it into the same formula. Cost of goods available minus cost of goods shush. Whoa. Sorry about that. You'll see cost of goods sold in the middle, of course, because it's an average. All that way in times of rising prices, which that's most often the case anyway. So now with that page handy, let's go back to the other one and answer the questions that B, C, and D are proposing. Oh, first we have to do this. Cost of goods sold. remembering that it was a time of rising prices. Plug in your numbers that you had previously. Let's analyze. Remember, we have rising prices. If we do things from the FIFO perspective, we're selling the older stuff, and in this case, the cheaper stuff. In times of rising prices using LIFO, we're selling the newer stuff, in this case, the more expensive stuff. An average is just kind of a jumbled bit of everything in between. So to answer B, which cost flow method would result in the highest net income? In other words, we're making the most money. FIFO, LIFO, or average? FIFO. I see Taylor saying FIFO, and he is correct. FIFO. The bigger question's why? We're selling the oldest stuff. And what Ira just said in the times of rising prices, or I'm adding to it, we're selling the cheaper stuff. In other words, we are lowering our cost, which is going to equal a higher net income. And if I had to say it even a third way, there's more money in our pocket. The cost of goods sold for FIFO is $25,600. If I'm selling $100,000 worth of stuff, I see a lower cost of goods sold versus 28. It's just more money in my pocket. B or C, which cost flow method would result in inventories approximating current cost in the balance sheet? Okay, we haven't talked about that yet. That's coming in tomorrow's lesson, but let's talk about this. It's actually FIFO. Why? Because it's more of the natural flow of goods. Naturally how it should work. If I buy something, I want to try to sell that before I sell something else that I recently bought. It's just, as far as the costing methods, it's the most natural flow with FIFO. And it ends up being true to the current costs. We'll talk more about balance sheet stuff tomorrow. I wasn't going to let that one question stop me from doing a good problem with you. So we'll evaluate that a little bit more tomorrow. Finally, D, which cost flow method would result in Lisa paying the least amount of taxes? Which one? Where are we going to look like we made less money? LIFO. Why? We have less net income or less money in our pocket because it's costing more to sell the stuff. Expensive stuff, that is. Going back to taxes, the revenue earned minus any expenses, even expenses cousin or cost of goods sold. If we report that to the federal government or the state government, the more you make, the more they're going to tax you and take from you. So why wouldn't everybody use the LIFO method to reduce their net income to pay less taxes? Well, it's not real natural. It's not going to work in the food industry or a perishable industry, because who's going to buy the moldy strawberries? No one. So if we never, like with LIFO, if we never sell the oldest stuff that we buy, What's, it's just collecting dust. Yes. They absolutely could, because they could just say, right, because right now our strawberry is expensive. Yeah, because they're out of season. Okay. So we're not, and I'm glad you brought that up. It's not selling the stuff, the moldy strawberries. It's recognizing the value of the cost to us to sell. And so right now, out of season stuff might be more expensive. But what time are we out of here today? 57.